Smooth 98.1, love music, love life. It's Monday morning. You are tuned into the Smooth Breakfast. Yes, the perfect start to your Monday and your week as well. My name is Ayokunmi Kikiria. It's that time to get into the world of business on Business Express. This morning, we're taking a look at something interesting that has been making the round in the news. And of course, that has to do with Dangote's cement share price appreciation in the month of February, and also take a look at Nigeria's industrial sector as well. Kind of like a mixed bag this morning, but hey, stay with me on this one. Joining me to have this conversation is Ameerat Adamu. She is an investment research analyst at ARM Investment. Very good morning to you, Ameerat. Great to have you on the show.
Thank you for having me.
Absolute pleasure. And of course, you can join us on the show this morning, sharing your thoughts on WhatsApp on 0809-444-0981. We're also streaming on YouTube. So if quick audiovisual is something that interests you, you can join us right there at Smooth 981 FM Lagos. Smooth 981 FM Lagos. So just like I mentioned, that shares of Dangote Cement have soared over 20% so far in the month of February 2025. Amira, what exactly uh, do you think or actually has triggered this surge?
Okay, so I can say one of the major reasons for the increase in Dangote Cement's stock price is the announcement of their $400 million expansion in Ethiopia. So
Mm,
they are investing to add a second production line to their Mogha plant, which will double its production capacity from 2.5 million tons to 5 million tons per annum, with operation expected to commence in 30 months. And this expansion is a strong signal of growth. And additionally, in mid-November 2024, Dangote's board approved a proposal to raise medium to long-term debt funding from the domestic capital markets. So this move is targeting a stronger financial structure to support their ongoing operations, which has helped boost investors' confidence. And
okay.
looking back at 2024, the stock price experienced some turbulence after reaching the 700 range, driven by significant buying interest by Otedola. So, however, that caused illiquidity issues for the stock. And we saw it was till late last year before we saw liquidity, a little bit of liquidity in the stock. So now with this recent expansion and their funding announcement, so the stock has gained momentum, lifting its price again and prompting investor sentiment basically.
Huh, okay. Interesting there. Now, looking at this particular appreciation, it doesn't seem to have applied to, shares of other industrial firms in Nigeria over the same period that we're talking about here. BOA Cement has been flat at 93 naira, but there was an 11% rise in shares of Lafarge Wapco. Why the difference among these three big players here? Are you there, Amirat? Looks like are the gremlins already creeping into the system? Let me see here. Okay, I guess I'll have to try to get Amirat back on board. Oh, Amirat, are you back? It seemed like you kind of froze for a minute there. Network, allow us to be great, please. It's way too early in the morning.
Mike,
You're going in, you're going in and out, unfortunately. Okay. So I guess Amirat will make a return shortly for us to continue on this conversation because I'm really curious to know the answer to the question I asked earlier. All right, Amirat, are you back and better right now?
yes, I believe so. Can you hear
All
me
right,
clearly?
I can hear you. Fingers crossed it stays this way.
Yeah, fingers crossed. Okay, so can you go over the question,
Yeah,
please?
I was talking about the appreciation that it doesn't seem to have applied to shares of some other industrial firms as well. I talked about BOA Cement. They've been flat at 93 naira, but there was an 11% rise in shares of Lafarge Wapco. Why exactly do we have this different amongst the three of these companies here? Looks like connectivity is not allowing us to be great this morning. Uh, Annoyingly so. Sometimes you make the best laid plans, but they never, or they sometimes do not seem to pan out at the end of the day. I'll keep trying to make sure that Ameerat can get back on this call so that we can continue on this conversation. I have a number of questions, for her to get a better understanding of what is going on with the Dangote Cement share price, really. And as she had mentioned earlier on, the plans to invest $400 million to upscale a second production line at its Muga cement plant in Ethiopia. Now, which is going to double the facility's annual production capacity. It's at 2.5 million tons, but it's going to double up to about 5 million. So interesting to see what's going on there. Ameerat, welcome back. Great to have you in once again. My fingers and toes are crossed at this point in at this point in time.
Uh, Okay, so I got your question. So well, it really comes down to the specific circumstances surrounding each company. So for Dangote Cement, they saw an increase thanks to the expansion announcements as well as their strategic and financial decisions, which helped push its share price up by more than 20%. On the other hand, Boa Cement hasn't had any major news or development recently to excite investors. So its stock price has remained flat at 93 naira.
Yeah.
Meanwhile, for Lafarge PLC WAPCO, the increase so it's due to last year's announcement that its majority shareholder Hoxim sold its stake, its 3% stake to Chinese company Hangshin Cement for a $1 billion deal. So this sparked investors' confidence, driving its share price from 35 naira to about 70 naira last year. Also, we saw Lafarge report a significant 45% increase in their profits after tax for 9 months 2024. And their
Right.
Q3 2024 standalone was also impressive with 703% increase. So it's that same positive momentum that continues to support Lafarge stock performance. So in summary, each stock is reflecting the unique story and momentum behind the business at the moment.
Okay, interesting. Now, what is also interesting here is that ARM Investment Managers is managing the Ministry of Finance Incorporated Real Estate Investment Fund. Now, how can construction demand from this fund impact the industrial sector, if at all? I mean, you can, first of all, just hint us at the purpose of the fund, and then we can work our way from there. Oh dear.
Okay.
Okay, did you get the question?
I didn't get that.
Okay, let me take it again. Now, I said that ARM Investment Managers
Okay.
are managing the Ministry of Finance Incorporated Real Estate Investment Fund. Now, I just
Okay.
want to know, how can construction demand from this fund impact the industrial sector, if it does at all? And what exactly is the purpose of this fund? You can actually start with that.
Okay. So the Ministry of Finance Incorporated Real Estate Investment Fund, MRIF, it's a public-private initiative launched to tackle Nigeria's significant housing deficit, managed by ARM Investment Managers. So the fund is designed to make home ownership more accessible by offering long-term and low-interest mortgage financing to aspiring homeowners. So at the same time, it stimulates developers through offtake guarantees, encouraging them to undertake and complete affordable housing projects so that there is always a steady supply of homes. So the construction demand generated by these initiatives is set to have a considerable impact on the industrial goods sector. So
Okay.
as new housing projects get underway, there will naturally be a greater need for building materials such as cement, steel, and so on. So that would directly impact companies in this industry. And additionally, this will also boost construction activities by create jobs and increase disposable income, basically. So in short, the MRIF's approach is expected to drive demand and foster overall economic growth, providing a significant boost to the industrial goods sector.
Well, fingers crossed that that significant boost to the industrial goods sector really does happen. We need all we can get at this point in time. Now, I just want to really quickly circle back to Dangote's investment happening in Ethiopia. Now, I'm just wondering, I should have asked this since, why exactly Ethiopia? Why not other locations?
Okay. So for one, Ethiopia presents a really attractive market for several reasons. So first off, it's experiencing rapid urbanization and massive infrastructure development. So the demand for cement is only going to grow, and Dangote already has a plant there since 2015, which means they are familiar with the market and they have the necessary operational footing. So expanding in Ethiopia isn't just about capturing growth. It is also a smart move in terms of cost and efficiency. So in short, Ethiopia offers the perfect blend of market potential, existing operations, and economic momentum that makes it a compelling choice over other locations, if I can say.
Okay, now talking about market potential, I just want to know here, out of complete curiosity. I mean, are these the type of decisions? Are they enough to actually buy the stock, or where do you stand on that one?
Okay, so the company's strategic decisions indicates that they are thinking ahead and are planning for growth, which is a good sign. However, as an investor, you have to like zoom out and examine the whole picture, the
Ah,
company's overall financial health, the current market conditions, as well as the management track record. So even though the expansion and related actions appear promising on the surface, our in-depth analysis reveals that the stock is trading at levels that we believe are too high, given the
okay.
risks and uncertainties in the market. So based on our target price in-house, we view the stock as a sell at the moment, given the current price. And in our assessments, the risks such as economic volatility and execution uncertainties outweigh the short-term positives. So we wouldn't recommend buying into the stock at its current price of
Hmm.
100, yeah.
Okay. Okay. Advice very well taken. Advice very well taken. We're actually run out of time, but Amiras, I just need to get your thoughts very quickly here. What is your outlook for the sector in 2025? We're still in the second month of the year, still a bit of a way to go, but what is it looking like from your perspective?
Okay, so we're really optimistic about the industrial goods sector performance for 2025. Sure, there are some short-term challenges such as high production costs and some economic volatility, but
Right.
the long-term fundamentals are solid. And we've seen the current government administration is clearly pushing for economic development. They have even bumped up the 2025 budgets from
Budget, yeah.
49.7 trillion to about 54 trillion. And capital expenditure allocation also benefited from this, jumping from 16.48 trillion to about 23.96 trillion. So with massive infrastructure projects on the horizon and companies investing heavily in capacity expansion and technology, we see 2025 as a good year for players who can weather the challenges and take advantage of growing demand. So basically, 2025 will be a good year for the industrial goods sector.
Mm. Amen to that from your mouth to the ears of the Lord. We need all the movement, all the upward movements we can get after a turbulent last 1 or 2 years. Thank you so much, Ameerat Adamu. She's an investment research analyst at ARM Investment. It's been a pleasure having you on Business Express.
Thank you for having me.
All right, we have a great Monday and a great week as well. Thank you for being a part of the show this morning. Keep it tuned to the Smooth Breakfast on Smooth 98.1. We'll line up great music for you as we get along to 7:30 and taking a look at the headlines on Freshly Pressed.